Hi, Colby Martin and Kaui Garcia from KCMG Real Estate Advisors here today with Bill Litton, lender from Cross Country Mortgage.
Well, thank you for being here. I greatly appreciate the opportunity to share with you guys today. So, our business is we're mortgage lending. So we lend money to people that are buying primarily residential real estate.
Right.
But our approach has always been an approach of this is the largest purchase that you're ever going to make in your life, probably the largest debt encumbrance that you're ever going to have as well, right? So we want to make sure that we're looking at everything. How does this affect your financial future? As you know, a lot of times when we collaborate, we're looking at payments to make sure, because I could approve someone somewhere and maybe the payments are too high and we want to get them comfortable. So our approach is the full financial picture. Our clients, are residents in Delaware County, Chester County, Pennsylvania. We work with a lot of great real estate agents, so we consider them our clients as well. And really, it's that collaborative effort we think that gives the best result to the end home buyer.
We've been doing business together for a really long time. I think it feels like forever.
Yeah.
But one of the things that we value in our approach to consulting with our clients is understanding what their end goal is, where they are now, and where they want to be. And that includes being in their budget, making sure they have enough money to close, and if there's anything they can do to improve their credit, kind of getting them from here to there. Can you give maybe 3 or so hints to clients or buyers looking to purchase on what they can do to
Absolutely
prepare themselves for buying a house and getting pre-approved?
Yeah, so one of the things is definitely being really conscious of your credit. Right?
Mm-hmm. Don't go buy a boat.
Don't go buy a boat. If you're going to buy an airplane, maybe buy the house first, and keep paying your bills. So all things credit are really important. So just keep making your payments. Really important too is keep your credit card balances low in relation to the limit. That's we call the utilization ratio. We want to keep that low. So all things credit. The other thing is employment. So if you have a really great job opportunity coming up where you might switch jobs, you might want to talk to a mortgage professional.
That's a very good point.
Do that.
Yeah. So do you run into that often with maybe even buyers who are more seasonal workers or anything like specific teachers?
Yeah. So absolutely 2 areas where that's a big consideration. But a lot of times when people make big life changes like buying a house, it comes at a time when they're getting married or they're like, hey, right. I'm going to make more money now, so I'm going to go buy a house. Well, we qualify you on job A. Please tell us about job B, which might be the job you're going to, because that you might be able to buy the house and get the promotion and get the increase in income at the new job. But talking through it to understand the best way to lay out that strategy is really important.
I think the first thing that people do when they're getting ready to make any large purchase is go on the internet. And they look around and they run their own mortgage calculators and they, try to figure out what their payments are going to be and all. Is 6 months too early to start planning with you?
So we say the mortgage planning process really is never too early. I feel like if you're going to buy it within a year, again, biggest purchase you're ever going to make in your life.
It doesn't matter if it's your second house, your third house. It just always seems to get bigger and bigger.
No, so sometimes I find people, and I can appreciate this, they don't want to waste their time if they're just going to have to do it again. Or they don't want to waste our time. They're like, I don't want to bother you now. No, please bother us.
Sure.
And in fact, you're not bothering us. But what we want to do is the more time frame and runway we have to address issues, prepare for things, put you in the best position possible, it's going to create the best outcome for what you're trying to accomplish.
Yeah, no doubt. There's no doubt that in your industry, along with ours, which we work, hand in hand together, it's never too early to begin that conversation and make a plan. We're all about planning, and that's what we really enjoy about working with you. You mentioned earlier about the collaboration, not only the collaboration with the client, but the collaboration with us and how we approach representing the client and presenting an offers in a very challenging market that we're in right now. We have a great system that when we're presenting offers, you know exactly when it's going to be presented. You're copied on all of the emails. You automatically, proactively reach out to the agent on the other side to give them the information about how qualified the client is and who you are. And honestly, I bet you 70, 80% of the time, the agents already know you. And it really makes our job a lot easier because you're really helping us to help our clients succeed. So the other thing I wanted to, it's just my compliment for you today, but the other thing I wanted to get your take on is I oftentimes run across clients that they see a rate that's advertised. But can you kind of explain the difference between or the fact that rates aren't the same for everybody or every product?
Yeah. So what I say a lot of times is my competition isn't actually what the other lender can offer. It's what the advertisement says, which might not be what you get in the end. So if you kind of compare it to car insurance, right? Do you have speeding tickets? What kind of car is it? How much is the replacement value of the vehicle? All of those factors, and with a mortgage, there's like 100 different factors that determine the rate. What people advertise is the best of the best in everything. So 25% down, perfect credit, the stars aligning, this would be the rate. And sometimes we have customers that is what they get 10% of the time, right? 90% of the time, when you add what we call adjustments to the interest rate, it's not what's advertised. So our approach, and when we work together, this is really big, is we're sending an initial loan estimate so you can see where every dollar goes. And both of you reach out and say, Bill, we're going to look at 123 Main Street today. What's today's rate? What do the taxes on that house look like? So we're giving full transparency and a clear picture on every offer.
Yeah, one of the things that I find and my clients find a lot of value in is if they're going to push themselves for that perfect house that's in the perfect location and it's in great condition, and maybe they're going a little over where they initially, gauge themselves being, we can run an estimate to see what that looks like even before we take a look at the house, so that we don't fall in love with something and then find out later it's just a little more uncomfortable than we want. And also, running at different scenarios too.
So how many times have we looked
a
at it and said, "Oh my God, this payment's too high. Let's not
readjust."
go there. Let's not go out with the house." Yeah.
So a lot of folks think that also, running credit with multiple people, like their car loan and their insurance and their lender, and those things have a ding on their credit. Can you explain that a little bit further?
Yeah. So we've actually started to pull a soft credit report, which 9 times out of 10 will be perfect and everything we need to pre-approve. There's one scenario where it won't, where we would, before we pulled a hard credit report, we would tell you and ask permission. But even if you're getting a hard credit pull, so technically, one hard credit pull, if you have a credit monitoring service, you'll notice the points go down 2 or 3 points. It's not a material difference. It's just the score noticing that there was an inquiry. Within a 45-day period, you can have multiple other credit pulls because you shouldn't be penalized to shop around.
Right.
So you are allowed to do that. I have not seen a scenario where getting your credit pulled was a detriment or made your mortgage financing not available or hurt the term. So something I would not be afraid of, because you'll get way more value out of a professional looking at the mortgage than you will kind of going it on your own without any professional eyes on the credit.
Sure. I think that goes back to the fact that we want the consumer to realize that what is advertised is not available across the board to everybody, that every individual has their own opportunities, and it's going to fluctuate on their credit score, on their debt to income ratio, on how much money they're putting down, the loan to value of the property. Those things all have an effect on the rate. It's okay to use that as a barometer, I would say. Would you say that that's okay to kind of get an idea of what's going on in the market, but know that you're going to be above or below depending upon your circumstance?
Correct. And I would say probably not below, because they're putting out these amazing, rock bottom rates, but you're probably going to be there or higher. And sure, if you want to get like within the ballpark, you could start with that. But the other issue I see a lot is people will take the online calculator and it doesn't account for any PMI if you're not putting 20% down. And how many of our people actually put 20% down, right? A lot of times it doesn't even make sense to put 20. Even if you have it, don't put it down. So I was just talking to a client last week and they were running numbers. And first issue was they kept basing all of the numbers for the loan amount on the purchase price. They just don't do this every day.
Yeah, right.
And then they weren't putting in the PMI, so they were way off. So I think getting our eyes on it as soon as possible is a really good thing.
The value of having someone not just pre-approve them, because you can go on any website, get pre-approved, put in a little bit of data, and pop out a pre-approval. It's just like our approach to our business. We're very consultative, and we're kind of looking at the big picture of all of these opportunities and scenarios. So one of the things that I really enjoy working with you is before we go see a house, if we want a good faith estimate or kind of get an idea what the budget is, both the closing costs and the down monies, or cash to close and the monthly payment rather. During the process, we can change and adjust things if we need to. Let's say a house is in the condition that you want it to be and you want to keep a little money in your pocket, we can kind of adjust while we go. And those are just planning steps that I think you get more involved in. I mean, in my opinion, over other lenders that I've worked with before.
Well, thank you very much. And our goal is to try to be like customize the experience because everybody's a little bit different. An example of that is if we have somebody who they've gotten under contract, they want to buy this house and they realize they're going to need to do some work on the house and they say, hey, any idea where I can get a personal loan? Well, we know the rate's going to be 15%. So if we can make some adjustments, if the contract allows us to,
right,
maybe don't put as much down and just hold back that cash, use that cash to do the renovations. So I know that the three of us with the communication that we have, we always try to cover all the bases so that we're thinking of almost everything.
And then after the transaction, we also monitor the rates and kind of see if there might be an opportunity for, saving some money through a refinance or something like that.
Yeah,
so we don't lose contact.
Yeah, we have a software program that actually tells us where the rate is that they got, what the current rate would be for them.
That's great.
So it makes it really easy.
They don't have to monitor the market.
Yeah,
you can
that's
let them
awesome.
know when they have an opportunity to restructure their loan and save some money.
Exactly. Yeah, we're watching that constantly and automatically reaching out whenever there's an opportunity.
Okay.
Yeah.
So outside of the mortgage and lending industry, what do you like to do for fun?
This is all I did.
This is fun.
So, I music, I would say, is probably my biggest passion is playing music, which I don't get to do as much as I would like to, because I'm probably working at the time that I could be playing. It's someday. If you see me out playing, you'll know I've got it all figured out. But going to see concerts, playing music, and boating has been a real passion over the past few years, and just kind of getting out on the water and decompressing and enjoying the sun and friends, family. Yeah.
Well, we can't say enough about what a pleasure it is to work with you.
Thank you.
And, again, we really appreciate the collaborative approach. And
Thank you.
We highly recommend Cross Country and Bill for all your mortgage needs.
Thank you so much. And the feeling is absolutely mutual. You guys are absolutely amazing. And anybody buying or selling a house that is able to work with you guys got really, really lucky. I work with a lot of great realtors and there's a lot of wonderful people out there, but you guys are really
Thank you, Bill.
tops for sure.
Thank you very much.
Absolutely.
Thank you. All right, well, we'll put Bill's contact information in case you're looking to purchase a home. 6 months is not too early. Earlier the better. And get in touch when you're ready to get pre-approved.
Thanks for your time.
Thanks for your time, Bill.
Thank you.